Good day to one and all. This is Dr. Sivaram of iknowindices.com. So I'll be presenting the double webinar today, 4th of December, and which will be tracking the forex market together. So you and me are together going to track the market and find out what the players intend to make in a market, either an upward move or a downward move. Then accordingly, we will try to take a trading decision and take the position also and find out the result out of that. Then I will review the result during the second part of this particular webinar, Tracking the Forex Market Together Part 2, between 14 and 14:45 GMT. At the time, I will tell you what is the trading strategy I have used in order to minimize the risk and maximize the profit. So, we have to understand we are in the month of December. It is the last month of the year 2013. So, whenever you come across the year end comes, then the players and other financial institutions, they have enormous pressure in order to improve the quarterly result, the final quarter results or Q4 results. So, invariably, they try to maximize their profit, and especially the players, in order to earn maximum out of that investment, they try to make some whipsaw moves in the market and induce the traders to take positions and later on act against them. And this sort of moves you come across very frequently in this market. So, since the players and all the financial institutions will be focusing on the Q4 earnings, so you'll come across the yearly trend reversal moves. So what is that yearly trend reversal moves? So normally you come across the monthly trend reversals during the last week of the month and the first week of the new month. And that the players try to do it, and also the institutions participate in that in order to handle the derivative market, the futures and the options market, so that there again they are able to earn big money. But during the yearly trend reversals, they have to necessarily set the trend for the new year. Before that, they have to accumulate as much positions as possible so that they can establish the trend for the new year. And in that process, they have to first of all book profit with regard to their holding positions, and then subsequently build new positions, and later on they can make the moves in the market. So the realization of the profit is very important. It is not the paper profit, it is the realization of the profit. So in that process, they try to make the extreme one-sided moves. You would have seen that last week that Euro and GBP started gaining slowly on a daily basis, and similarly USDN started gaining on a slow phase. And in that, people become really jittery, especially with regard to the N crosses. There the visible gain was seen, and invariably they have gained about 500 to 700 pips in the case of N crosses, and people really worried whether any seller will be able to make profit in the case of the N crosses. And then subsequently what happened? And now you find in the case of the N crosses, they started making the slide. So ultimately what we need to understand is they make the one-sided moves in order to induce the traders to lose the patience. And these extreme moves are part of the game during the trending of the yearly trend reversal time. And also they make the one-sided contrarian moves, like how they gained in the case of Euro, GBP and USDN. Now they are trying to drop all the three. And also they make the extreme moves in the case of Australian dollar on the downside. So this sort of moves will really test the patience of the traders. So if you are on the other side of the trade, suppose during the dropping market, when you have got a buy position when they continue to drop, or if you hold a sell position and they continue to rise, you find that the rise is endless or the drop is endless. And that sort of aggressive moves, they try to make it. So in such a scenario, most of the traders become afraid and they will not be able to change their bullish to bearish sentiment so quickly because they are all extremes of such sentiment creations, and suddenly the players reverse the market. And also you come across the market reacts even to that of the minor news, and also very frequent rumors are being released from time to time during this time, and they make extended stop end. Extended stop end is nothing but a move from the current level about 100 to 150 pips on the downside. In a matter of about 2-3 hours, they just reverse and go above this. And that is extended stop end. And similarly on the upside also. So yesterday you would notice that in the case of GBP, they made that move, and from that of 1.63 area, they straight gone up to 1.64, created the fear to that of many of the traders and started making the downward move. So that sort of moves, they normally do it in the case of GBP in order to create the market sentiment, but they will try to do it in all currencies this time. And when they make the variable or the contrarian moves in all the majors, you find the crosses also undergo the extreme moves. And during the trend reversal time, you come across, they handle it in a sequence. So first of all, they handle the commodity crosses. The commodity crosses like Euro AUD, GBP AUD, and Euro CAD, and Euro GBP CAD, and this sort of currencies. The commodity crosses, then CAD yen. Wherever you come across a commodity cross like Australian dollar or Canadian dollar, they have done the extreme moves initially. Then subsequently they come to the top of the commodity crosses, commodity pairs. So especially Canadian dollar, USD CAD has gone up in a big way from 1.03 area, and Australian dollar from the 0.9394 area, it has come to 0.90 area. And when all other currencies are showing 10-15 pips move, you find Australian dollar has already dropped 111 pips. So this is how they try to make extreme moves. This is mainly to handle their respective crosses and also the pairs which are related to Australian dollar. So when they make such extreme moves in the market, you should be in a position to trade. And that is more important. And keep in mind that simply they can reverse the market by using the rumors. From time to time, they can simply release the rumors and don't be moved with that of the rumors, and they are going to be short-lived. And they can just like that make the moves on the upside, hit the stops and start making a big drop. And this sort of moves, you can see it in the market. So you will have a great trading opportunity of doing either way trading using the hedging. So those who have got the hedging facility will be in a position to do the either way trading in the market. So such extreme moves can also attract margin calls if you trade without the stop. So keep that in mind. Over trading is the causal factor for the margin call for most of the traders. It is not that the market reading is wrong. It is mainly because of over trading. Suppose somebody thinks that euro can go up and take one lot of or one mini lot of euro, and if we wait simply, it can drop about 150, 200 pips or 300 pips. Afterwards, it will bounce back. And there won't be any margin call. But if we continue to average every 30, 40 pips on the downside, in a day they can drop about 150 pips. And if they do it for 2-3 days, then you find all your accumulated positions start making loss. Then that attracts margin call. So it is not that the wrong market reading which brings in margin call. It is because of over trading. So take a commitment, New Year commitment, that you will not over trade. And over trading comes in if you lose big money, then you wanted to earn back the money as quickly as possible. In the process, you should not lose all your money. That is the most important thing. So coming to that of tracking the market now for today. So we use the derived forecast, a statistically algorithm-based forecast is being derived, and that I had displayed it on Mondays during Asian Session Live Market Analysis webinar. So today is fourth. A dip and firm up move was expected during that of the Japanese session. Afterwards, they had done the swing up slide as you see now. Then they are expected to make a swing and firm up move. And more of a slide moves are expected. So the general trend in this particular week will be more on the downside. So the forecast-based algorithm-based forecast says that the market is expected to make a downward move. Okay. Then we do the market reading. So with regard to the market reading, what we do is we note down the initial lows and the highs in 4 majors and 2 commodity pairs around 3:30 GMT. And here you come across the levels, what I noted down. So Euro formed the low 1.3582, and here it is given wrongly in this quote page, but I noted down from some other quote page. So this is the correct level, 1.3582 and 1.3597. Where are the lows and the highs? And currently Euro is staying below that of 1.3582, the initial low. So we will have a great technical trade opportunity of sell here, looking for a big drop. And similarly in the case of GBP, 63.78 was the low and currently trading around 63.71. 63.93 was the high. So they went about 5 pips above and come down. So a brief upward stop and before making a drop below that of the initial low. So we will try to take a sell position in the case of GBP also. But actually we should have taken the position around 8:30 GMT, waiting for 30 minutes from start of the session. Since the webinar is by 9 GMT, we will try to take slightly at the lower level. It doesn't matter. Still, we will try to book profit. And in the case of USD-Yen, 102.28 was the initial low. They made a downward stop on that and went above that of 102.67 to 102.84 and come down to 102.63 below that of the initial high. So they intend to make a drop in the case of USD-Yen also. They made a downward stop and below that of the initial low briefly and went up and made an upward stop. And such a wild swing, they had done it for about 50 to 60 pips and then started making a slide. So this is mainly to discourage traders holding a position for a long term. Suppose somebody has taken a sell around 103 and he waits for the market to come down. It has come to 102.24. He is not willing to book profit. Then they come up very quickly and show that we are not going to take the profit. And immediately that fellow covers it and later on they make this drop. And that is for one reason. Other reason is they make such a whipsaw moves in the market so that the traders take wrong positions. So once the traders take wrong positions without understanding the direction of the market, the players make money. Then USD CHF 90.40 is the low and 90.64 was the high, the current high, and 90.50 was the initial high, and they've gone above and they are staying above it. So we can do a buy and sell trade here. And in the case of Canadian dollar, 1.0639 was the low. They made a cut of that by 1 pip, and 1.6050 was the initial high. They have gone above and gone up. So we can do a buy and sell trade in this case of Canadian dollar. So Australian dollar 0.9067 was the low and 91.41 was the high, and they've gone much below than that of the initial low and holding it. As I explained many times, if a currency pair has fallen more than 75 pips, it is unlikely to reverse on the same day. But for the downside is very limited, so we will not take any position. It is like something like beating a dead snake. It will not bounce back. So from that of the market reading, we have found that they just breached the initial lows in all the three currencies and staying below that. Sorry, in the case of Euro and GBP and also Australian dollar. And in the case of Yen, they just made a downward stop and upward stop and come below that of the initial high. Then in the case of CHF, a technical trade opportunity is seen. They cut the high and staying above that of the high. So now let me explain to you how we. So based on the forecast and the market reading, we enter and the exit in a specific currency pair. We buy near the low or sell near the high. If it is a normal swing trade. If it is a technical trade, we sell below that of the initial low, buy above that of the initial high. And that will be a technical trade. We'll try to close it in the same session. Now these are all the session timings. So we are in European session, 8 GMT. The European session starts. Now we are at 9 GMT. So this is what the slide for market reading. So the type of moves, what I have been explaining it, I want to emphasize here that they had done the stop and on either side in the case of the Canadian dollar, what you have seen, and a false move coming up to the high and reverse it in the case of today they have not done it, only during gap time they do it. And extended move and the intentional move, they alternate with each other. That is, they make a downward move as an extended move for 2 hours. Then the intentional move will be on the upside for 2 sessions in the start of the third session. So this is how they alternate. In between, you come across the swings during the mid sessions. And early and the late sessions, they make the stop and false move during the gap time. These are all the moves normally you come across during trend reversal move. You come across extended stop and that is for about 150 pips stop, and they don't reverse it in 30 minutes. Instead, in 2 hours to 5 hours, they just reverse it. And within the same day, you should be able to see that. That is called extended stop. And that they do it before making the shift in trading zone. So once you use the hedging, what happens? So the hedging is also called as the sell stop or the buy stop or entry stop. There are different names given in different platforms. So once you take a position, we can keep 30 pips away from that the hedging order. If it is filled, then you hold both the positions. And when the market makes up and down moves in a big way, you should be able to book profit on either side moves of the market. And that is a basic idea of using the hedging instead of a stop. If you use the stop, then the stop just close the position and you will not have any scope to trade until otherwise we commit another position. So how we take the entry? We wait for 30 minutes from the start of the market, and after we identify whether it is an extended move or an intentional move. And if it is a normal swing, then we try to take a buy near that of the low and sell near that of the high. If they have breached it, then we try to sell below that of the initial low and buy above that of the initial high as a technical trade. And exit, we try to exit in the same session and book profit during such moves and keep initially 30 pips hedge order. Once a position makes about 25 pips profit, keep stop at entry and trail the stop as well as trail the take profit order so that our profit is protected. Now coming to the okay. As far as the hedging strategy is concerned, if a position is hedged, what you are supposed to do? You have to watch for 30 minutes once the position is hedged, and if the market is showing profit in the hedge, then keep stop at entry and try to allow the market to move against you, doesn't matter, and you don't incur any notional loss. Also, once this reverse the market, your stop at entry will be filled and you will continue to trade with it of the original position. Otherwise, if you are smart enough, we are able to identify the either way trading opportunity, keep stop at entry in the hedging, and once they make about 150 pips net change downward move, for example, you are taking a buy, and you know that it is an extended or an intentional move, and the daily permitted level of 150 pips they already reached, so they are supposed to hold there and buy and later on reverse the market. So you can book profit on the sell side and keep 30 pips below the hedge order. Once you start rising it the next day, you can just raise your hedging order till you are able to keep stop at entry in the buy position. That way, you will be able to trade on either side of the buy as well as the sell. I will show it in the trade. Now, as I explained to you, code page got struck. Okay, I will take the position in the case of euro. Page is not coming. I hope it is not a support edge. Okay. Now, in the case of euro, it is staying around 1.3580. 82 is the initial low. So we'll try to take a sell position. $1.3580. So exit, we'll try to keep 45 pips below that of the current entry level. And we'll keep buy stop 30 pips above that of the entry. It is a technical trade. Sell below that of the initial low, as they're just keeping below that of the initial low for more than 30 minutes from the start of the session. Okay. In the case of GBP, already they have dropped it. So 63.56. Okay. Yen. Okay. As I told you, they had done 102.61 with 30 pips hedge order. Aussie already dropped. So GBBN, again they have dropped to 167.84. Because it is a mid-session, and as they are dropping Euro, GBP as well as USD Yen, GBP and Euro Yen are expected to drop further. That is why I am taking the sell position. Once you perfect your reading, then you will not get any ambiguity. $3.6. Okay, fine. So here in the case of crosses, we'll keep 50 pips hedge order. Now, in the case of N, sell after upward stoppant. They had done the upward stoppant up to the initial high and come below the initial high. So we are taking a sell after the upward stoppant. And in the case of GBP and yen, contrarian move is seen because they are dropping Euro GBP as well as USD yen. So when they are dropping it, so obviously you find that net changes slowly, and USD yen, which is supposed to go up when Euro and GBP drop, they are already dropped USD yen and holding it. So it is a contrarian move on the downside. And USD CHF, they are expected to gain the levels, as I told you. USD CHF, I have not taken it. It will be a buy position with the entries sell stop. The technical buy above initial high. When they sustained above that of the initial high for more than 30 minutes, we try to take the buy position in order to close it within the same session. So these are all the positions I committed. Now let us review the market. Now, Euro formed up a little bit, but GBP has already made that drop. As I explained, as per the forecast, it has dropped, and USD yen just nominally gained a level, and CHF made a small dip, and also we are not taken, and Euro yen we have just taken a sell position. Sorry, it is GBP yen and Euro yen. So GBP yen, they are just making a dip, and Euro yen, they just formed up about 3-4 pips. So ultimately, what is more important is understanding what sort of moves they are doing it. Then we can try to take the appropriate trade. So reading their moves is very important. We have to find out what sort of moves they are doing. It's stop and or a false move or an extended move or an intentional move. Once you decide on that, you can decide the appropriate trade. So in the live market quote page, I'll show you if they just cut the high and stay above their high for more than 30 minutes, you can take a buy and definitely they will make a rise. Now I had done it in the case of CHF. And if they hold around that of the high, not breaching the high and start making the slide, then you can take a sell position near that of the high. From the start of the session, if they don't cut the high for more than 30 minutes, you can straight away take a sell position. They will make the slide. And similarly, in the case, if they are near that of the low and not breach the low for more than 30 minutes from the start of the session, and you can take a buy, they will definitely make a rise. And sometimes our reading can go wrong. So we cannot afford to take unlimited risk. So we have to use the hedge order to limit the risk. Of 30 pips hedge order is fine. And once the position makes profit, you can keep stop at entry and then try to book profit on the upside when they rise it and remove the hedge order. Similarly, on the upside, once the market drops, then you can keep the stop at entry in the sell position and remove the hedge order. Once they continue the drop and stop cutting the new low for more than 30 minutes, you can just book profit. So you don't require any sophisticated tools in order to understand how to take entry and exit positions. But we need to understand the type of moves they do it during different seasons of the year. And as I explained, that they do the intraday trend reversals, not more than 2 sessions they continue to make the same move. Then you come across the weekly reversals, week beginning false move, and later on they make the either way stop ins and the intentional move on Wednesday, Thursday, and Friday. Then you come across the monthly trend reversals, the month beginning and the month end time. They make compulsorily the monthly trend reversal move, the volatile moves. Then you come across the last week of the month, last month of the year and the first month of the year. They make the yearly trend reversals. So many of the people get confused with regard to all the trading only during the trend reversal times. So if you could perfect your trading during the trend reversal and we use the hedging, we know very well that we can do either way trades with the help of the hedging. Then there is no fear. You find great trading opportunities in the case of all these currency pairs. So normally people will think that even when you have just observed the live market quote page during the Japanese session, when Euro and GBP are making a small dip, they went up in the case of USD yen. So immediately people will think that it is USD gaining more, so Euro has to go up. And Euro has to come down, GBP has to come down, and USD yen has to go up. But now you find that Euro and GBP started making the dip, and they are not rising yen. So this is how they make the moves in the market because of that the crosses are being handled. So if you understand how they handle the crosses, and many of the people are thinking that because of large volume in the case of crosses, the majors are moved. It is not like that. It is the other way. The players make the moves in the majors and induce the traders to commit wrongly in the case of crosses also. During the mid sessions, they handle the crosses. During the early and the late sessions, they handle the majors. So if you have got any doubt, these are all the positions. You can take a screenshot and I'll explain to you during second part of the webinar how the profit was made, or if it is hedged, how I handle the hedge. So if you got the questions, kindly ask the questions. I am willing to answer those questions. And see, I committed more positions here in order to show you how different types of trades can be decided. But don't overtrade by taking simultaneously so many positions. Okay, George has got a question. Do you take high and low set around 2:30 to 3:30 GMT, or we take according to recent high at 8:30 GMT? See, 3:30 GMT, if you note down, that will be more appropriate. Still, you can note down by 8:30 GMT. And if they are not 8 GMT, you note down session start time. And if they are not breached the high or the low, set around that time, you can take sell near that of the high and buy near that of the low. In Sundaram, can you help to explain why there is a gap time and what happened during that time and why it is formed? Who are the entities involved? Okay. So you have asked so many questions. Let me try to explain as much as possible in a public forum. See, the gap time is naturally formed time. It is not man-made. Because of the bank opening around 9:30 local time in respective countries, so you come across the gap time forms. Afterwards, they close it around 2:30 local time. So in between, you come across naturally a 30 minutes gap time is seen between Japanese and European and US, and 4 hours gap time between US and Japanese or the Asian banks opening time. Then what happened? So during the gap time, when the banks are closed officially for their transactions of the exporters and the importers, where billions of dollars will be used for currency conversion trade. So they can simply take about 2,000 lots or 3,000 lots and try to accumulate in one shot euro positions in order to meet the external obligations. So they might be importers, they may have to pay the money. And similarly, if they are exporters, the money would have been received from abroad and they have to convert into the local currency. And it will be billion-dollar currency conversion. So at that time, if the players plays a higher level stop and what happens? The stop and will be, and their order will be filled and the players have to incur a huge loss. So what they do is, they choose the gap time to make the stop. So when they make an upward stopment, then automatically such orders will not come. So only the stops will be filled. I can't tell beyond this, sir. Then Ramesh, the last trade should be euro yen. I changed it. Then Sohail, I attempted a trade. Okay, at 1.3. Stand C. Okay, I have taken a sell between 10 and 10:30 GMT at 63.71. Can I move stop to entry? Yes, you can keep stop at entry and strike. So always eliminate the risk. Don't think that if I keep stop at entry, they will fill it. It is a very wrong notion. So once you keep stop at entry, if they fill it, then they'll give you another opportunity for you to take sell positions. In case suddenly they come up, let them hit a stop at entry. It doesn't matter. And you will be able to get a fine-tuned level at a higher level to take another sell position. In case if they come above the initial low and stay there for more than 30 minutes, then they can gain the level. So instead, in a sell, you can take a buy and book profit. So you should be able to really judge the situation and accordingly trade. So don't immediately think that, okay, my sell is hit, then I may not be able to sell again. It is not like that. The next trade can be sell and buy trade, or it can be even buy and sell trade. And you have to quickly change your perception of the market, referring to the initial lows and the highs. Then you will find that you don't become bullish or bearish. You only look for the type of trades you want to do it. Whether a buy and sell trade or a sell and buy trade. You'll be able to quickly take a decision and execute the trade and see that you are able to book profit quickly. As I explained during the trend reversal time, you cannot do position trade. When you get about 30-40 pips profit, grab it. Then afterwards look for another trade. That way if you do it, you will be smart enough. And if you think that, okay, GBBN has to come to 162, so let me wait for that, definitely they will come to 162. But before that, they will make so many up moves before coming down. So in that process, what will happen, when you keep stop at entry, it might be filled. And again, you may hesitate to take sell positions because on Monday and last week, I know many of the traders, I recommended them to take sell positions in the case of Euro and GBN because they have been making contrary and upward move. They were hesitating really because they are not giving any profit booking opportunity for that of the short sellers. And continuously they gain the level. And they become mentally fatigued. And they said that I can do buy and sell trade. I will not do sell and buy trade. But after the drop, they all said, you have made a good call. What is the use? So they have to get rid of the market fear. And only then they will be able to commit the positions and earn money. Simply appreciating me that I have given a good policy of moves. There are so many questions. After handling the majors in each session, how can we take trade during the mid-sessions in terms of crosses? See, you have to watch the moves in the case of the majors, and they will hold the majors like this after handling it. But they will not simply reverse it, they will just hold it. So that those who have taken the sell position, they expect them to place the buy orders and then hit. So that is the strategy they follow. And if they simply make a big drop like what they had done it in the case of Australian dollar, nobody will take a buy. So they want the traders to buy during the dip And later on, when they make a big drop, all will come for distress selling at a lower level. And they will say that, oh, UK economy is so bad and European economy is so bad. Everybody will talk about their economic conditions at that time. And without understanding, the traders' economic condition has become very poor because they have committed a higher level of buy positions. So, mid-sessions, when they make a move like this, identify the type of contrarian move they are doing it, and they are not breached the initial high or the initial low, and simply holding it, small firming up move. Or suppose you want to take a sell position in the case of USD yen, then keep 10 pips above that of the market level, a sell order, and 30 pips above a buy stop. Then, if they don't fill that particular order for about 30 minutes, you modify and take at market the position. So as I explained that when they made the drop in the case of GBP, if I had have chased that and taken a sell position, what would have happened? They just formed up. So they will continue to give the opportunity. Let them come to 63, 7, 65, 70 and things like that. We can take a sell position again. So according to me, market rewards patience and not impulsive trading. Then Ramesh. What happens when the high or the low are reached after 2 to 3:30 GMT? In case, in question, in which USD pair for the last Friday, 30 minutes into the European session, I looked to see where the range was, closer to the low or higher Asian session. But the pair had already breached those figures soon after 3:30 GMT. See, as I told you that USD they made the one-sided gain last week. It is a trend reversal move. You have to really focus on that and find how exactly they are. That is what I told you, that they make the sequential trend reversals. So first of all, commodity crosses on the commodities, and later on they come to that of the yen crosses and majors, and finally European crosses. If we see Euro GBP, how they have dropped it. They dropped it to 82.45 and then gained it again. And that is how this sort of extreme moves, they just move it in the case of all the pairs during the year end and try to morph the money from the market in order to improve their balance sheet. So, during the trend reversal time, you need little more caution, little more understanding of the market, then only you will be able to do it. I cannot teach everything here, so it's in one. Do you have a web book that I can download? You can go to fxstreet.net. There, under my profile, you come across 10 webinars given, and you can just view those 10 My Trading System webinars, and you will be able to get the full information for the independence. See, whatever I can just disclose it in the open forum, I have just given it. But what I do it in the paid service is not being given. And so on. In short, your prediction for Euro 939 GMT, it will have a bearish trend. Don't use the word bearish or bullish, sir. It will be a downward move, an upward move, that's all. See, what big sentiments you see when Euro has come down and it's gone up, and GBP has come down to 1.6330 and then gone up to 1.6360. Do you call it as bullish, bearish and things like that? I don't think so. It is not appropriate to do that. Because when you use such words, invariably you tend to develop the sentiment. And, once the sentiment is developed, it is very difficult to change the sentiment. And that is why most of the traders fail to turn from bullish to bearish, and they lose money. They continue to sell when the market started gaining. And after gaining the extreme level, they turn bullish. And later on start buying it, and afterwards the market starts dropping. So that is what the normal saying is, the strongest bear, when it turns bullish and start buying, the market drops. So if you go with the sentiments, you will do only wrong trades. So never use the word bullish and bearish. And that is the word, and those words really trigger your mind to become one of that nature. It is something like if 10 people are crying in a particular place, you go there and without your knowledge, you started crying. Once you join the herd, then it is very difficult to come out of it. Our human emotions are so powerful. Then, lamb. Can you please explain what it is slide? Slide means slow dip pip by pip, and drop means suddenly drop of 5-10 pips or 30 pips and things like that. No, you can call it as a sideways, but ultimately when you watch the entire session, you will understand they will step by step come down. And that is slide. And Suhail, in short, your prediction for Euro, bearish trend, again the same question. Okay, explain the correlation between majors and crosses. Okay. See, basically, the players handle the majors, the 4 majors and 2 commodity pairs, like a puppet show. In a puppet show, they just make the upward and the downward move of these things. And with the help of that, you find the resultant that process undergoes a changes. So, what they do is, you have the net change. Now, Euro is showing positive net change, USDN is showing negative net change. It is a contrarian move. What will happen when Euro is positive net change, GBP is negative net change? Euro GBP goes up. It's come to 15 pips positive net change. This is how they are correlated. When the numerator gains, then the corresponding cross gains. When the denominator gains, the corresponding cross drops. So it is a simple ratio. So it's a simple ratio of the numerator and the denominator, which is given in 4th decimal or the 5th decimal case. And that is what you trade. So it's nothing but the decimal derivative out of the division. So in the ratio, when you find that the numerator is a bigger number when compared to that of the denominator, then you find the number goes up. When the numerator increases, the market goes up. When the numerator comes down, the denominator goes up, the market comes down. So that is how the ratio is. And then you try to find the relationship with regard to this. See, now you find that Euro is showing 1 pip positive net change and GBP Yen is showing 6 pips positive net change. So it is the contrarian move. Euro is showing USD weakening move and USD Yen is showing USD gaining move. Then what happens to Euro Yen, which is in positive net change? Gone up. Okay, so that is how the relationship is. You try to focus on that, you will be able to get all the details by yourself. There is no hidden secret in that. Straight away you can observe it with the help of the Live Market Code page. All the moves we are seeing today are the start of the year. Yeah, they are all trend reversal move, and you will find the market is making really whipsaw moves on upside and the downside, which will create confusions to the traders. That is what I told you. We have to keep hedging order, and once a position makes profit, keep stop and entry, you'll be able to really earn good money. And even if it is hedged, either way trade you can do and earn money. So ultimately, what is more important is we should be able to fish in a rough water. Okay. George, swing means they try to make about 10 to 15 pips or at the maximum 23 pips, downward and the upward move near that of the high or near that of the low. And there are occasions like USDN, they make a move from the low to the high and high to the low. They are all called swings. without breaching the high or the low, they make it. And that they do it during the mid-session. They make positive net change in the case of euro without breaching the high, and negative net change in the case of GBP without breaching the low. Then you find euro GBP goes up. So that is how they handle the crosses during mid-session. But ultimately, when you are taking the position during the early session, try to close the position during the late session. Calmly wait around 13:30, 14 GMT. You will find nice profit in your positions. You can simply book profit. And when they are handling the mid-sessions, you are disturbed, then it will be difficult. Okay. Time is up. We wrap it in 3 minutes. So what will be the take profit for other orders? See, normally take profit will be about 30 to 45 pips. And if the going is good, up to 75 pips. So when you retrace high during US sessions, since it has been kept low for 2 sessions. Yeah, they make the swings, but ultimately they want to make a downward move in the market because they had done the gaining last week and they wanted to offload and try to do the bottom fishing by middle of next week, and later on for year end again they want to gain the levels. So we have to read their intentions of the intraday and the long term. Then we will be able to really find what they are trying to do, and trading becomes a child's play. USD is showing an upward trend, but eventually it will show downward trend like we started. Okay, thank you, Lord. No more questions? What is the lowest level? So probably I'll reserve these questions to the second part of the webinar. I'm extremely sorry, time is up. So here I just taken the positions and I'll review the positions, and you can also review the positions. I'll come back to 14 GMT, and before that I'll try to book the profit in the corresponding positions and show you how exactly the profit was booked and what trading strategy I've used it. And again, between 14 and 14:45 GMT, that will be the start of the gap time between the European and the US session. And I'll explain to you how the gap time trades can be done just for a short period of 30 minutes. And also early part of the US session. Whatever they move, they do it during the gap time. The exact opposite, they will do it during the first 30 minutes of the session. You can watch it on a daily basis. If you are convinced, then go for such gap time trades. We'll be able to quickly grab about 20-30 pips profit. And also we'll refer to the high-low and net change in the live market code page and find what changes they have made in the market. So I'll come back by 14 GMT and explaining to you the part 2 of the webinar, Tracking the Forex Market Together. Meanwhile, we kindly track the market and come back. Hope you find it interesting. Thank you. See you again.